Union Budget 2026. Coming soon. This is the vision of Viksit Bharat, fueled by an unprecedented GDP growth of 7.4%.
Hello everyone. As we approach February 1, the finance world is focused on our Honorable Finance Minister Nirmala Sitharaman, who is set to present her 9th Union Budget. Although February 1 falls on a Sunday, the paperless budget tradition is expected to continue. In this video, we will decode what different groups are demanding from Budget 2026. What may change in tax, GST, MSME, customs, jobs, and strategic sectors. And what businesses and professionals should prepare of before the change arrives. Let's break it down step by step. So let's start with you, the taxpayer. The central theme here is higher post-tax income. PHTCCI has proposed new tax slabs. Income up to 30 lakhs should be capped at 20% of tax. Income between 30 lakhs to 50 lakhs should be capped at 25%. And income above 50 lakh at 30%. There is a strong demand to raise basic exemption limit from 2.5 lakh in the old tax regime to reflect inflation and rising living cost. Other key expectations in the personal taxation are higher deduction limits on interest income, regular indexation of slabs to inflation, a proposal for joint taxation for married couples, and the ability to claim foreign tax credit at the TDS stage instead of only at return filing. There are some challenges faced by modern workforce, such as EV as a perquisite. It means if an employer provides an electric vehicle, valuation rules remain unclear. Clear guidelines are expected to avoid unexpected tax deductions. Cross-border ESOPs, employees moving between India and overseas roles want apportionment of the rules so that the tax is paid only on the period for which they have worked in India. Now let's move to corporate tax, manufacturing and global hubs. To remain globally competitive, India must reward investment, scale and substance. In the manufacturing, Section 115 BAB, there is a strong call to reintroduce 15% concessional tax rates for new manufacturing companies to revive Make in India. GCC, Global Capability Centers. India now hosts 1800 plus GCCs acting as a global hubs for AI, engineering and R&D. To retain this momentum, industry is seeking either a 15% corporate tax rate or a 10-year tax holiday. For data centers, Budget 2026 may offer weighted deductions for investment in data infrastructure. Weighted deductions means if a company spends Rs 100, it may be allowed to claim 150 or even 200 as an expense. One of the most significant professional demand is a complete TDS reform. Currently, there are 37 plus TDS sections, ranges from 0.1% to 30%. This results in disputes, blocked cash, compliance fatigues, etc. Industries are proposing a 3-bucket TDS system. Bucket 1 for salaries with the normal slab rates. Bucket 2 lottery and online gaming with highest marginal rates. And bucket 3 for all other payments. Now let's move to GST 2.0. From compliance to confidence. For corporates, GST 2.0 is about certainty, not new tax. A critical concern remains ITC matching and genuine buyers. How will genuine buyers be protected when suppliers default? System-driven ITC matching reform are expected to reduce buyer-side exposure. Faster dispute resolution. With litigation ballooning, a time-bound GST dispute resolution mechanism is expected. Big export relief is expected by deleting Section 13(8)B of the IGST Act. This would shift the place of supply to the recipient place and align India with the global tax reforms. This will reduce cross-border disputes and provide clarity for service exporters. Now let's look at the customs reforms. Customs reforms may quietly unlock massive value. Legacy litigation and amnesty. Over 1.5 lakh crore of custom duties are stuck in litigations across 38,000 plus cases. An amnesty scheme is under discussion to settle legacy disputes and unblock the capital. Duty rate rationalization. Custom duty slabs may be reduced from 8 slabs to 5 or 6. This simplifies classification and reduces disputes. FTAs and the inverted duty problem. Under several free trade agreements, finished goods are sometimes cheaper than the raw material. This hurts domestic manufacturing. Correcting these distortions is a key exception. Faster clearances. Accept improved trade facilitation through digitization, risk-based assessment, and faster post clearances. For MSMEs, Budget 2026 is about survival through liquidity. Inverted duty structure. They are expecting refunds not only on goods but also on input services, capital goods, and machineries. They are expecting automated refunds, 90% provisional refunds, faster cash cycles, reduced manual scrutiny. Technology enablement. Policy support is expected to help MSME adopt AI, robotics, data analytics to stay globally competitive. As we all know, that to remain technologically relevant, India must lead in AI, robotics, advanced machine learning, and space technologies. Here, industries expect production-linked incentives, public infrastructure spending, and ecosystem support for deep tech innovation. Now let us move forward to capital markets and crypto. PCSE, MCX, and other bodies have discussed with the finance minister in the pre-budget meeting to reduce security transaction tax, that is STT, on cash market trades. This move will bring higher liquidity to the market, deeper capital markets, and will strengthen participation across all investor categories. Crypto industry calls for a big change in the budget. As per the current tax framework, crypto gains are taxed at 30%, and also there is a TDS of 1% on crypto transactions. Due to this, trading activities are shifting offshore. The industry demands lower TDS, rethink 30% taxation, demands clear regulation and simpler reporting for crypto. Let us also have a look at corporate law. The professional bodies demand simplified compliance regime, especially for MSME and growing companies, through digitization, auto-filled forms, fewer procedural requirement, and faster processing at MCA. They also demand faster dispute resolution and e-adjudication to reduce litigation backlogs. Industry bodies are also pushing for greater tax neutrality and regulatory clarity for mergers, demergers, and amalgamation, particularly under Section 233, including protection of loss carryforwards and recognition of investment divisions as valid undertaking. Government is likely to unveil a new mining policy in Budget 2026 to reduce imports and boost domestic mineral production. High focus minerals are silver, copper, and zinc. The key highlights of the new mining policy would be possible expansion of private sector participation in mining and processing, and emphasis on value chain development, not just extraction. The strategic rationale for the new mining policy are rising industrial demand, global supply chain constraint, and geopolitical risk. Union Budget 2026 is not about patchwork fixes. It's about resetting systems before India enters the next decade of growth. Think of it this way: India's economy is like a complex computer. For years, we have kept it running by adding patches to old software. But 2026 represents the final major update before India switches to a new operating system. Those who prepare early will benefit most. Be informed, be prepared, and be future ready. If you like this video, do share, like, and subscribe our channel Future Ready. You can also follow us on WhatsApp, LinkedIn, and Facebook. Thank you.